Namaskar traders and a very good evening. We're looking at the global markets first. Today, 3rd of Jan 2023, it's a Tuesday evening, and I can see the US markets are mostly in the negative. SGX is not reflecting that much, it's just down by 30 points, trading at 18,274. My interest is S&P 500, wherein I can see that the index has slipped quite a bit from its intraday highs. So far, it's just started trading. Structurally, it stays in a downtrend. It has been trying to pick up a bit of momentum, but it's kind of stayed range bound, which we generally see in the last week of December's trade because of their holidays. And the first half of Jan should see a trending move. So we should sooner get a breakout from the S&P 500. Now, SGX, as I reflected, is down close to 40 points. This index too has slipped from its highs as we discussed the markets. Now let's take a look at our markets, how we played out. It was yet another positive close for the Nifty, up marginally 41 points, closed at 18,300. So the index is doing fairly well to sustain itself, not only above that 18K mark, but fairly above that 18,200 mark. One thing that I noticed over the last 2 days is pickup of buying momentum in the last hour's trade. Back-to-back 2 days, we've seen that buying momentum picked up in the last 60 to 90 minutes of trade. So market seems to be saving that buying spurt for the close. It leaves a good feel towards the end of the day that the market closed positive. I think that's what it's trying to imply. It's trying really hard not to give away from the recent and decent bounce back. I had drawn a Fibonacci retracement from this high to this low, which the index is now at the 50% mark, the halfway mark over here. And resistances kick in at these levels from previous swing lows also. So not a bad level for the index to face a bit of resistance, that 18,300, 350 kind of a zone. So Nifty is at anticipated resistances. Today's move was good. In fact, yesterday when I took a look at the market and analyzed the price behavior, my view was yesterday's low should not be broken today, because if that had happened, then it would have definitely opened up some new gates on the downside. But that has not happened. On the other hand, it has closed pretty well. However, I will suggest that still continue to use yesterday's low or little below that 18,200 mark. You can see that very clearly on the 75-minute time frame, how these highs have been tested and they have become lows. Generally, when we see previous highs gets tested and they form lows, the swing highs generally get retested, which means that this move should take us close to that 360, 370 zone. Ideally, this move should take us there unless you see anything fancy on the downside happening tomorrow morning. So the trend and momentum wise, short-term trend is up, momentum is not that great. Daily charts are slowly, very slowly and steadily improving their momentum. The rush of gaining fresh grounds have kind of gone away, and for the last 3 days it's been more like a very subdued with a pinch of pretty decent intraday choppiness, and that's been the kind of market conditions. Long-term charts, of course, are fairly well placed and bounce back from supports. So trading bias should be on the long side. However, if you get good shorting opportunities, you should not hesitate. Which reminds me that personally I went with a cement stock on the short side, though towards the end thanks to the late hour buying momentum, that trade also bounced back. I'm not in the money in that position. Let's see how it plays out tomorrow. Now let's take a look at Bank Nifty. Far superior in terms of price movement. You would notice that the bounce back is pretty strong. What has started to worry me a little bit in the 75-minute time frame of the Bank Nifty is my momentum indicators are reflecting a bit of divergence, which does not necessarily mean it has to come down, but it tells me that this movement on the upside is likely to slow down. In this kind of a movement, wherein over the last 4 days, you see that the last 3 days, you notice that the index is making a higher high, higher low. The bare minimum to be noticed is whether previous day's low is breached or not. So you can work with today's low as the immediate level for the Bank Nifty. The close is pretty good. And an extremely important question that comes to my mind is, if this divergence leads to a slowdown and the Bank Nifty stops to contribute to the overall market like the way it has done over the last 8 trading sessions, then which other sector can come up and kind of support the overall markets, and whom do Bank Nifty hand over the torch of this leadership? Well, I cannot think of any as of now. Hopefully, once Bank Nifty slows down and some sector picks up, we will have more clarity on that. But talking about sectors, 2 sectors are interesting. CNX IT has given a nice move today. Momentum has been improving for a few days. And today's move was encouraging. If we get this structural breakout, you would notice that this is where the previous highs were and recent highs. That's exactly where we are right now. This is CNX IT on the daily time frame. This is where last time it bounced back, gave this shallow bounce back. So lows becoming highs. A typical breakout kind of a behavior, which can take the sectoral index up to these levels, which will probably be close to 50% of the fall. Not bad. And IT can therefore participate a bit on the upside. Keep an eye on Infosys for that matter. However, more interesting and an important juncture is where CNX Auto stands on the daily time frame. You can clearly see that it had given us a sharp bounce, sell-off, and then an equally sharp bounce back. And over the last 2 to 3 trading sessions, it's gone sideways. Momentum on the higher time frames is not good, it's weak. On the daily time frame, it's picking up slow and steady. We had a short-term kind of a rectangular breakdown on the 75-minute time frame. You can see this, after which it has just bounced back. And so I feel that CNX Auto is at a make or break, or should I say an extremely important, crucial juncture, wherein a slip and a close below today's low, somewhere if it closes here tomorrow, then I think we should brace ourselves for further weakness. However, if this breakdown was a trap, then tomorrow morning we will see that the index has bounced back. And if it takes out today's high and closes somewhere here, then probably it is aiming for further upside. So there's a make or break, I think, juncture for the CNX Auto Index. And if that's the case, then I would request keep an eye on 2 stocks, particularly Mahindra and Mahindra, because Mahindra also, you can see that is stuck in this range, momentum on the higher time frames slipping. So do we get that breakdown from Mahindra or breakout? And the other one is Tata Motors. After a sharp sell-off, decent bounce back, and the bounce back so far has taken an ABC kind of a shape. The previous sell-off was beautiful, and so now over here the important question is, do we get further weakness on the downside from Tata Motors. So keep an eye on CNX Auto and these auto names. We did see some selling in two-wheelers. So auto can be an important play for tomorrow or maybe the next 1 to 2 trading sessions. Amongst the top stocks, I would like to talk about one stock which I think is going to play stock specific, from a stock specific point of view, is going to play an important, very important role, especially if the index opens up on the downside. And that's Reliance Industries, because Reliance on the daily time frame has enough technical evidences for a prospective move, breakout or breakdown. Number one, it's given us a bounce back, which has taken the stock back to its previous lows. Number two, structurally, it's still in a downtrend. Number three, higher time frames momentum is not that great. It's still weakening. Number four, you can see supports kicking in very well on the 75-minute time frame with a double topish kind of a behavior up here. This is the height of the double top. If it opens up from a very, very short-term point of view, we can see these kind of levels. And so for that matter, I would say use today's low and today's high as an expected breakout or breakdown. I do not think that this anticipated breakout or breakdown, I do not think will lead to a huge move, a one-way move. But that move will be ideal for a short-term trader who preferably is an intraday trader or max to max holds on to a position for 1 to 2 trading sessions. In other words, what I'm expecting is if this low is broken, I'm expecting a day or 2 days of fall. And similarly, if this high is broken, an immediate move of 1 or 2 days of prices going further on the upside. Direction wise, it is better not to predict, but anticipate. Looking at the technical price evidences, I would say 70-30, 70% chance of a breakdown, 30% chance of a breakout. I have more evidences towards this rather than this, but that does not mean that this cannot happen. Anything can happen in the markets, and markets do prove that to us time and again that we were wrong. So with that in mind, I think this situation which we are going through, intraday choppiness, overall markets trying to hold on to their gains, however it's not kind of running away. FII sell figures back to back almost every day now. So it seems like the market is not too sure, not too confident, but still has enough steam and strength to hold on to the grounds. Let's see which way we get a nice trending move soon. Keep an eye on Reliance, keep an eye on the CNX Auto and the auto stocks. Few odd finance stocks like HDFC and Bajaj Finance you can also add to your list. Looks interesting. And let's see what's in store for us all in tomorrow's trade. Till then, take care of yourselves and good night.